Hey everyone, and welcome back. We've covered a lot of individual concepts, liquidity, market structure, FVGs. But how do we actually put it all together to find a trade? Today, we're talking about confirmation criteria, the step-by-step checklist for identifying a high-probability, low-risk entry that aligns with the smart money. Let's be clear, the goal isn't just to find a trade. The goal is to find a high-probability trade. A great entry is a precise point where market structure, liquidity, and institutional momentum all line up, offering us precision with minimal risk. This entire process is built on the smart money concept framework. We're not trying to outsmart the market. We're learning to identify where the big players are stepping in so we can align our trades with them, not against them. So, what does an optimal entry look like? It's the exact moment when the market's intent is confirmed by a structure shift. The liquidity has been collected, and price shows institutional strength through displacement, then retraces into a zone for us to enter, like a fair value gap. The anatomy of a perfect entry has 5 core elements: a liquidity sweep, a market structure shift, clear displacement, a fair value gap to enter into, and a logical, risk-defined execution. You never just jump into a chart and start looking for a trade. The very first step is always to identify the higher timeframe context. Is the higher timeframe bullish or bearish? Are we in a premium or discount zone? You must avoid trading against the dominant order flow. This sets your overall bias. Once you have your bias, you wait for the market to make its move. Step 2 is to wait for the liquidity sweep. This is the stop hunt where price pushes beyond a key high or low to trigger all the retail stop losses. This is smart money collecting orders before they truly move the market. After the sweep, we need confirmation that the trap has been sprung. This is step 3, confirm the market structure shift. We drop down to a lower time frame and wait for price to break a swing high or low in the opposite direction of the sweep. This MSS signals that the intent has changed from accumulation to distribution, or vice versa. Now we look for the power behind the move. Step 4 is to identify the displacement, that strong, impulsive move that often creates a fair value gap. This brings us to the final step, the entry. We don't chase the displacement. We are patient. We wait for price to retrace back into the fair value gap created by that displacement. That is our high probability entry zone. Our stop loss goes logically beyond the liquidity sweep or the start of the FVG. A few quick checks for validity: the displacement must be clear and impulsive, and the structure shift must be confirmed by a candle body close, not just a wick. And remember, timing is everything. The highest probability for this sequence to play out is during active sessions like the London or New York Open kill zones. Avoid low volume periods. Common mistakes include trading without waiting for displacement, ignoring the higher timeframe bias, and taking every single FVG as an entry. Let's visualize the sequence for a long trade. Sweep, price sweeps liquidity below a previous low. Displacement and MSS, a strong bullish move upward creates an FVG and breaks a key swing high. Retrace, price pulls back into the FVG. Entry, you enter long, with a stop below the sweep low. And of course, manage your risk. Use tight, logical stops, risk no more than 1% per trade, and aim for a solid risk-to-reward ratio. So, here is your pre-trade checklist. Don't enter unless you can tick these boxes: higher timeframe bias confirmed, liquidity sweep occurred, market structure shift identified, displacement with an FVG formed, entry taken at the FVG retrace with a logical stop. For even more precision, add confluence: are you in a discount zone? Is it during a key session time? To summarize, the best entries are built from patience and confluence. Only trade when structure, liquidity, and displacement align. Remember, a great entry combines high precision, low risk, and institutional logic. Thanks for watching, and I'll see you in the next lesson.